Hello, welcome back to this course on F&B, usually financial statements. Now we were discussing the cost of sales. The next cost item in the cost of sales is cost of audio-visual cost and miscellaneous cost. So the audio-visual cost for the food and beverage department is when the hotel is providing the audio and visual equipments to the guest on rent, and the hotel has to pay any rental to outside company for providing those services, or have to spend any other amount in relation with providing the such services to the guest. Those costs will be treated as audio and visual cost. So usually these costs are rental costs that the company, if the company is borrowing from third party providers, not the labor cost or any other type of setup cost. Usually is only the rental. Then there are other miscellaneous costs, such as the company is maybe selling the mugs, company is selling the branded merchandise, umbrella, apparel, or t-shirts in the F&B outlets, which is branded as an F&B, the outlet or the F&B brand the company is carrying. So the cost of those items will be treated as miscellaneous cost. If those items are sold in the souvenir shop or in the gift shop of the hotel, then the revenue will go there rather than come to the F&B revenue. But if such shirts or logo items or merchandise is sold in the outlet itself and the guest is buying them, then the cost will be then the revenue and cost will be treated in F&B department. Sometimes the F&B department is selling recipe books, sometimes they are selling the jam, sometimes they are selling the pickles or any other merchandised item which is being treated as which is being usually sold to the guest. If the item is not food and beverage item, then it will be going to be the miscellaneous cost. If it's a food and beverage item such as jams or pickles, then it will be considered as food revenue and the food cost. But if it's not food and beverage item, such as it may be a packaging, or it can be a mug, it can be a t-shirt, can be any other thing which is not food and beverage, then it will be considered as miscellaneous cost. That is the cost of other revenue, cost of sales. And then you will be calculating the total cost of sales, and then finally you will be arriving at the gross profit for F&B department. Usually gross profit percentage for F&B for the department would remain same over a period of time, because the costs that we have incurred are usually variable depending on the revenue, and the margins are set in terms of percentages. However, there are usually the variances in the food cost and beverage costs. So when you are analyzing or reading the profit and loss statement, you have to compare the food cost with the food revenue, beverage cost with the beverage revenue, audio visual cost with the audio visual revenue, and miscellaneous cost with the miscellaneous revenue, and look at the percentages, comparing with the budget or forecast or the previous years, or a trend between the previous year's history. So you will be able to realize if there are significant differences between the costs. Then you may need to go and investigate into the revenue, into the expenses, why such costs are higher. Sometimes the overall food and beverage cost, when you compare the food cost with the food revenue and the beverage cost with the beverage revenue, it all seems in line. There is still a difference that may be due to the allowances, which may be higher than the normal years. So you have to keep an eye on few things here when you are analyzing the gross profit. One is, what is the allowance? Are the allowance in the same ratio as has been in the past, or there has been a spike or a decline in the allowances? Then you have to also look at the cost of food, the average check, because when you are selling a recipe, let's say you sold 2 portions, the cost of food will increase in the same proportion, right? But if you are giving higher discounts on the compared to the previous years, then the cost of food as a percentage to revenue will increase, but as a per person or per recipe per portion will remain fixed, because they don't change. or even to the other way around, if the revenue is same, average check is same, the cost of portion is same, but cost of the total portions sold are similar, the cost may still be higher because of the increase in the prices of the raw material. So usually the hotels have to review their menu cost every 3 months, every 6 months, and make sure that the cost of the menu items are in line with what has been the standard or what has been assumed as a standard, because the price setting is sometimes based on the cost of item. So if the market prices have changed, you may have to update your cost price, you may have to update your menu prices. So that's the gross profit analyzation. Then the next item in the cost would be the cost of labor and cost of other revenue, which we are going to discuss in the next video.